Hello students, today we will work out some few problems in funds from operations. Students, as discussed in the previous session, there are two methods of calculating the working capital from operations. Funds means working capital. So, how much working capital did you earn through conducting the business operations? There are two methods. The first method is statement, the second method is the PL account. As I feel doing PL account, adjusted PL account will be more convenient to the students. So therefore I go by the method of adjusted PL account to find out funds from operations. So to give you a glance, students, all non-cash expenses and non-cash transactions are recorded in the debit side. Incomes are recorded in the credit side. That's called non-business incomes are recorded in the credit side. And non-cash expenses are recorded in the debit side. In short, expenses debit and incomes credit. Next, current year profit will come in debit and the last year profit will come in credit. So this is just a brief glance, and to get back your memory, I just told you. Let us go to the first problem. So first problem, the PL account of a company for the year ending 31/3/8 and 31/3/9 showed a profit of rupees 20,000 and 30,000 respectively for the year ending 31/3/9. So 20,000 is called the last year profit and 30,000 is called the current year profit. Last year profit will come in credit side and current year profit will come in debit side. Provision for dividend was made to the extent of 50,000 will come in debit side. Transfer to reserve amounted to rupees 40,000 will come in debit side. Depreciation written off was rupees 25,000 debit side. Loss on sale of old machinery amounting to rupees 5,000 was debited to PL account will come in debit side. Sale of investment resulted in a profit of rupees 3,000 which was taken to PL account. So 3,000 is an income profit credit side. Sale of furniture resulted in a profit of 3,000 which was taken to PL account is a profit income credit side. A commission of rupees 4,000 received on a non-trading activity was credited to PL account. Non-trading activity means non-business income. So 4,000 will come in credit side. You are required to calculate the funds from operations. So students, totally 4 items will come in the credit side. What are they for? Number 1, last year profit. Number 2, profit on sale of investment. Number 3, profit on sale of furniture. Number 4, commission. So these 4 items will come in credit side. What are the items will come in the debit side? Number 1, current year profit. Number 2, dividend. Number 3, transfer to RF. Number 4, depreciation. And number 5, loss on sale of machinery. So students, 4 items in the credit and 5 items in the debit. Okay students, proposed dividend, transfer to reserve, depreciation, loss on sale of machinery and current year profits. So credit side we get last year net profit, profit on sale of investment, profit on sale of machinery, commission. So expenses are recorded in the debit and incomes are recorded in the credit. So expenses are to be added, incomes are to be deducted. So total the debit side 1,50,000 minus 2,000 minus 3,000 minus 3,000 minus 4,000. You get funds from operation 1,20,000. So it is the working capital that we got through conducting business operation. Second question. Calculate funds from operation from the information given below as on 31/3/10. Net profit for the year 31/3/10 6,50,000 will come in debit. Profit on sale of building 35,500 will come in credit because it's an income. Goodwill appeared in the books at 1,80,000, out of which 10% has been written off during the year. So goodwill written off will come in debit. It's 18,000, 1,80,000 into 10%. You get 18,000. Old machinery worth rupees 8,000 has been sold for 6,500 during the year. So 8,000 machinery is sold at less 6,500. So you get a loss of 1,500. That's 8,000 minus 6,500. So the loss will be recorded in the debit side. And 1,25,000 has been transferred to general reserve will come in debit side. Advertisement suspense account 5,000, it's an expense, will come in debit side. See students, goodwill written off 1,80,000 into 10%, loss on sale of machinery 1,500. Next GR transfer, then advertisement suspense account is an expense, and current year net profit, all these items will come in the debit side. Credit side, last year net profit not given, so dash. Then profit on sale of building 35,500. Total the debit minus the credit 35,500. You get funds from operation FFO 7,64,000. Next problem students. From the following, calculate funds from operations for the year ending 31/12/11. Profit for the year is called current year profit debit, depreciation debit, goodwill written off debit, loss on sale of machine debit, profit on sale of investment credit, tax provision debit, dividend received credit, prelim expenses debit, transfer to GR debit. Commission paid on non-trading activity debited to PL account 10,000 will come in debit. So students, kindly try this problem on your own. Answer, you get 3,16,000. From the following balance sheet of Gowri Company Limited, you are required to prepare fund flow from operation. So students, we have 2 years, 2019 and 20. 2019 is last year, 2020 is current year. So they're giving you 2 years balance sheet. Land and building, last year it was 1 lakh, current year it is 95,000. Of course, we can treat 5,000 as depreciation, but in the adjustment, the last line, they have mentioned that no depreciation is charged on land and building. So we can't assume this as depreciation as per instruction in the question. Plant and machinery, last year 80,000, current year 90,000. There is an increase in plant and machinery, so there is a resultant of purchase. So it will not come in adjusted PL account because we get only loss on sale of plant and machine, and then or we may get profit on sale of plant and machine, but purchase and sale will not come in adjusted PL account. So in adjusted PL account we get only expenses and incomes. Stock, data, investment, cash, all these are called current assets. So these current assets will come in statement of changes in PL account. It will not come in adjusted PL account. So what comes in adjusted PL account? Only expenses and only incomes. So land and building, there is no depreciation as per adjustment. Plant and machinery, there is depreciation as per adjustment. Stock, data, investment, cash, all these are current assets. So it will not come in adjusted PL account. It will come in statement of changes in working capital. Goodwill, last year 20,000, current year 10,000. It means there is a goodwill written off 10,000. So kindly mark in your book, goodwill written off 10,000. Last year 20, current year 10. Means 10,000 goodwill is written off, will come in debit side. Then share capital. There is an issue of share capital. It will not come in adjusted PL account. General reserve, last year 30, current year 32,000. It means GR transfer is 2,000, will come in debit side. PL account, last year profit 20, current year profit 20. So 20,000 last year will come in credit. 20,000 current year profit will come in debit. 6% debenture, no change. Creditors and provision for tax. So creditor is a current liability. Then students, provision for tax, last year it was 5,000, current year it is 10,000. So there is a new additional provision of tax rupees 5,000. So therefore it will come in debit side of adjusted PL account. So additional info, students. During the 2009 dividend rupees 15,000 were paid, will come in debit. Depreciation is written off on plant and machinery 6,000 will come in debit. And no depreciation is charged on land and building. So last year land and building was 1 lakh, but current year land and building is 95,000. So the decrease cannot be treated as depreciation as per adjustment. So students, this is the answer for the fourth. Goodwill written off 10,000, GR transfer 2,000, that's last year 30,000, current year 32,000. So 2,000 is an additional GR. Then provision for tax 5,000, then dividend paid given in the adjustment 15,000, then depreciation on plant and machinery given in the adjustment 6,000, then current year net profit 20,000, then last year net profit 20,000. So total of debit side minus the credit side, you get funds from operation 38,000. Fifth problem, students. From the following details find out funds from operation or funds lost in operations. So profit and loss balance as at 1/4/2009 6,54,450 will come in credit. It's called last year profit. Profit and loss account balance as on 31/3/10 7,45,650 is a current year profit, will come in debit. Depreciation on plant and machinery debit. Profit on revaluation of investment credit. Goodwill written off debit. Prelim expenses written off debit. Provision for tax debit. Proposed dividend debit. Profit on sale of building credit. Dividend received is an income credit. Interest on investment credit. So students, kindly work out this problem. Here's the answer. So students, any doubts, kindly feel free to ask in the WhatsApp. Thank you.